Could Dollar Tree's performance be a telling sign of an impending recession? Today, we're going to uncover the potential implications of Dollar Tree's trajectory for the broader economy. Let's dive in. Chris, today we're talking about Dollar Tree, and in your recent article for MarketBeat, you had tied in a famous quote about General Motors, as goes GM, so goes the nation. And today, investors who are looking at which direction the nation, or at least the national economy is moving, may want to look at Dollar Tree. So let's jump right into that. Tell us about Dollar Tree's performance here, and how does this reflect on the current economic landscape?
Yeah, so one reason I wanted to look at Dollar Tree this week was to see if their results tracked with the results that we've been seeing from other retailers this earnings season. Unfortunately, they did. Dollar Tree's clearly indicating, not only in their report, but in their earnings presentation, that lower to middle income consumers, which make up their predominant customer base, are feeling a lot of stress. Now, one thing I noticed was that Thomas Hughes also wrote for MarketBeat this week about Five Below, and they had a little bit of a different earnings report. Thomas and I haven't had a chance to compare notes yet, but I'd be curious to see if there are any parallels or where the deviation is between these two companies. So what does this mean for the overall economy? Well, Lacey, you know that I believe that we were in a recession in 2022. And some people would say we couldn't because it would have been unprecedented, but we were coming out of an unprecedented pandemic. We were coming out of an unprecedented mitigation measures. So I don't necessarily buy the logic that a recession couldn't have had unprecedented features, in this case, relatively high employment. But I'm digressing there a little bit. I invest in the economy that is presenting itself to me, not in the economy that I kind of wish it would be, or that I think it might be. What Dollar Tree's report shows us is that the effects of higher interest rates are working their way through the economy. And I believe that it means that the Fed is done hiking interest rates. I think we're done with that. I don't think that means we're going to have a pause, or a cut. But I think it does mean that we're going to be keeping interest rates at least where they are.
All right, so despite kind of being a bearish narrative here, are there any bright spots that could potentially make Dollar Tree attractive for investors?
So there's a couple of silver linings. And I would encourage investors, if you're looking at Dollar Tree, to look at the presentation that they issued when they released the earnings report. You can find it in the investor relations section of their website. They did show that they're gaining market share over the competition. This may sound a little strange. Maybe call it the best house in a bad neighborhood. I sometimes overuse that analogy, but I think it works in this case. What they're finding is that in areas where they're competing with other retailers, they're gaining more traffic. They're gaining more share of that customer's wallet. That may not be a lot of comfort to shareholders now, but that may be something to watch in the future. Another area that was positive for Dollar Tree was fuel costs. As we all know, the price of oil is down, and therefore the price of gas that we put in our cars and that has to go into trucks is down. So Dollar Tree is noticing that that's having a positive effect on the cost that it takes to get the goods to their store. So that was a positive if you want to look at it that way.
Okay, and let's talk about, you had shared a chart with me from Dollar Tree's earnings presentation, and it says a lot, it really does. So let's take a look at that quickly. We see that traffic is up from 2022, but spending is, of course, down overall. Talk more to that if you would.
Okay, so this reminds me kind of one of those charts that you had when you were in school, and they said, this is your homework assignment. You had to look at this and answer a bunch of homework questions about it. But I think really it shows investors that it really doesn't have to be that complicated. The left-hand part of this chart shows 2022 numbers, and the right side of the chart shows how it compares to 2023 numbers. We can see that traffic is up in 2023, but the total ticket amount, which basically means the bottom line number that you see on your receipt when you check out, that's lower. So they're getting more floor traffic into the store, but they're seeing customers buying less overall. And then you look at what are they buying? These are another two items that you'll see on this, what they call consumables. That's your consumer staples items. And you can see that consumer staples are taking a higher percentage of the customers' purchases than what they label as discretionary items. So we've heard a similar story from retailers like Costco, from Walmart, for Target. And this chart really illustrates what those other retailers have been saying.
Okay, so then there's theft, which kind of seems to be a recurring theme here, Chris. And Dollar Tree is, of course, no exception there, unfortunately. And it's been one of the largest drags on their margins here. But is the company employing any strategies to maintain profitability here, or is all hope lost?
Yeah, I brought up retail theft, particularly in my article, because it was impossible to look at Dollar Tree's presentation and ignore it. When you looked at what was affecting their margins, which, by the way, are up a little bit, that should be said in fairness, it was hard not to notice that retail theft was one of the biggest drags on those profit margins. So retail theft isn't it doesn't come without a cost to these companies. Now, Lacey, I mean, you and I can look at it very practically. If we decided to donate 50% of the groceries that we purchased every month, and we donated that to charity, well, we have two choices. We can either not eat, or we have to replenish what we've lost. And that comes at a cost to us, especially when our income isn't going up. We just have to replace it. And so that comes out of our savings or out of our profit, or we have to go into debt to replenish what we've lost. It's really no different for stores to do it. And insurance only goes so far. And, some commercial insurance policies will or won't cover retail theft, but they'll, it gets wonky in there. So that's a cost for them. And even if you have the insurance, it's still going to cost them in terms of the transportation costs to get that inventory to the store. So this isn't something this is a real problem for the stores that sometimes gets glossed over by people saying, well, the store just has insurance for it. There's two ways that Dollar Tree can get around this, and other stores can get around it. One is they simply close their stores earlier. And I know I've seen that in my area. You just see some stores that just close earlier now. As I see the problem with Dollar Tree, that when you close the store earlier, that's going to affect those low to middle income consumers the most, because they're the ones that may be working second jobs. They may have more of a need to have stores open on their schedule. And when Dollar Tree is close to them, that means it's a customer that's potentially lost to them. And the other option is that they could hire security. The problem there is that when you hire the security, that's going to eat into your profits, because again, you have to pay for that somehow. So you're paying for that out of your profits, and that's going to mean lower earnings, which means a lower share price.
All right. Well, Chris, I also just want to mention, love when you share these analogies. Maybe it seems silly to some, but for investors that might be new to this, I mean, the stock market can get kind of confusing. So we appreciate you kind of making those connections for us. But wrap it up for us here. How might investors consider approaching Dollar Tree stock given these current circumstances and the future predictions here?
Okay, so I'll try to keep this a little shorter than I've made some of my other points. But here's the point. If you looked at Dollar Tree, if you look at the stock chart for Dollar Tree, it looks like the stock formed a bottom around October. And if you bought it into the stock at that time, you've made a pretty nice profit on it. Dollar Tree doesn't pay a dividend. I don't know how high the stock has to go higher. Truist recently came out with they reiterated their buy rating on the stock. They gave it about a $129 price target. That seems about right to me, but that doesn't give the stock a whole lot of upside. So without a dividend, it's hard for me to say it's a good stock for you to hold. One strategy, if you are a current Dollar Tree shareholder, maybe you bought that dip in October, you've gotten a nice gain. We're at a great time of year where you might want to just take a little bit of that profit and to offset some of the stocks that you've lost on, and you can do some tax loss harvesting that way. If you still believe in the overall story of Dollar Tree, just wait 30 days and buy it back. And you can get it, you can help you with your tax situation, and you can benefit from getting that profit from buying this stock back in October.
All right, well, thank you everyone for joining us on this insightful discussion on Dollar Tree today. Go ahead, leave your thoughts in the comments down below. We always love to hear what our viewers have to think, what their side of the story is. Do not forget to check out our channel for more analysis. But until then, we'll see you in the next one. Thanks, Chris.